Well, yesterday I asked the question, can the Fed save the markets from rising yields? And if today's any indication, it looks like the answer is no. Or at least that so far, the Fed has not figured out what exactly they need to do. Today, Powell was set to give a speech, and whenever Powell is set to give a speech, Wall Street tunes in because Wall Street understands that Jerome Powell is their benefactor. They live and die at his pleasure, and they have been in a bad mood the last few weeks. If you haven't noticed, if you haven't been following this channel, things are not going well for them. Today, the Nasdaq is officially down 10% from its record highs, which means we're in a correction as far as the terms that Wall Street sets for the definition of that term. The other stock indices are not doing well, and most notably, bond yields are still rocketing higher. Now, we have not taken out last week's highs. I believe today, as of recording this video, the 10-year yield is sitting somewhere around 1.56%. Last week it spiked up to 1.6, but we're within 4 basis points of last week's high, and the way things are going, would not be shocked, unless the Fed does something tomorrow. I would not be shocked if we take out last week's highs and break above, or maybe even close above 1.6 tomorrow. So Powell's speech today was expected to reassure markets, to hand out some goodies, to say, hey guys, don't worry, we can do more. Even though the Fed has made it clear that they're doing everything they can to suppress interest rates and to keep yields low, they're gonna keep the printing press running at full steam. They've got massive, they have QE infinity going. Seems like a long time ago that started, but QE infinity is ongoing. They've got Fed funds is still all the way down at 0. I mean, Powell is clearly, their friend. He wants to be their friend. But yet it's still not good enough, because Wall Street always needs more and more. When you get them addicted to their monetary heroin, it's not enough to just, dole out the same dose. You have to keep ratcheting things up. They need to take a bigger hit every day. And so they were begging today. They said, come on, Jay, give us something. Give us SLR. Give us the twist. Give us anything, man. And not only did Powell fail to deliver on Wall Street's demands, he basically laughed in their faces. He said, essentially, that he's unconcerned with what's gone on so far. He doesn't think that there's been enough pain in the markets to arouse his concern. He doesn't care that the 10-year yield is up to, well, after his speech now, 1.56%. And that's clearly not what the markets wanted to hear. And so that's why, Powell essentially said, he laid out the conditions for them. He said what would make them act. The markets wanted Fed to act, and when I say markets, I mean that's kind of a bastardized term in this context, but that's the best we have, so I'll stick with it. Powell said he would be concerned if markets became disorderly in his speech, and that would cause him to change course and decide, hey, we need to do something different here. And so, lo and behold, as Powell's speech dragged on, markets became quite disorderly. There was, huge sell-offs in equities and in bonds. And, these petulant children on Wall Street are clearly begging for more and more money. They want bigger bailouts. And, some people also... and I would tend to be sympathetic to this perspective, although again, I wouldn't say with a 100% certainty, but there's also the perspective that Powell's lack of concern over the inflation fears that are starting to crop up in the economy. I think that manufacturing costs, raw materials, these sorts of things, are becoming a problem. I mean, even anecdotally, where I work, where materials are really cutting into us right now. Commodities are expensive, and yet Powell is unconcerned about inflation, meaning that he wants prices to rise even more. The Fed has made this abundantly clear, and therefore the market is going to have to price that in the form of a higher inflation premium built into interest rates. And so, in other words, yields must continue to rise. And so, while Powell is perhaps out of touch, I would not necessarily say that this is evidence that he has totally lost control yet. Because losing control, to me, would be Powell saying all the right things for Wall Street, whispering those sweet nothings in their ears, and still failing to suppress interest rates. That's, to me, when the Fed will have truly failed. But as of right now, Powell is just out of touch with his audience. For now, he's just whispering the wrong words into Wall Street's ears. And so for now, rates are going to continue to rise for that reason. Now, when Powell finally finds the right words, when he tells the markets what they want to hear, or more of what they want to hear, because again, Powell is trying his best to tell them everything they want. He's certainly not saying things to be overtly confrontational. He's not saying, hey, I'm really concerned about inflation. We're going to have to jack up interest rates to 10% in Fed funds. He's not saying that. Wall Street right now is like a child who's used to, who's already used to getting a piece of candy from their uncle every time they see them. They have totally priced in that piece of candy, and therefore, in order to make them happy, in order for them to just, when they're excited about something, when they think, hey, Uncle's going to bring me something, they're going to expect something more than just one piece of candy. They're going to want 2, maybe 3 pieces of candy, maybe a different kind of candy that they don't normally get to eat. That's what the Fed is really after here. And once Powell figures that out, once he gives them what they want, for example, an SLR extension, I have trouble believing that the way things are going today, even though Powell did not say anything about extending SLR, I can't see how SLR will be, the SLR exemption will be allowed to expire. And again, I'm not an expert on the specific inner workings of Fed regulation, but essentially with the SLR exemption, which was created back in April 2020 and is supposed to run through March 31st, 2021, what that essentially allows banks to do is it gives them a little more freedom to prop up the bond market because they don't have to hold as much cash. Now, I'm not sure if SLR refers directly to, reserve requirements, which the Fed did away with also last year. Banks used to have to, when you put your money in the bank, it used to be that the bank, even though they didn't hold on to your money entirely, they had to hold on to some of it. That used to be the rule. And in the old days of market banking, if banks didn't hold on to enough of your money, they would go bankrupt. Because you'd go to the bank and say, hey, I want my money out. And the bank would go, okay, I have to deliver that to you. Or else, if they didn't have enough money, they would be bankrupt. But nowadays, the Fed doesn't make them hold any money. And that allows them to go speculate. It allows them to go issue tons of mortgages. It allows them to fill up their balance sheet with all sorts of things, inject more liquidity into the economy, inflate prices higher and higher of assets, prop up zombie corporations, and of course, inflate the bond market, suppress yields. This is, all according to the Fed's plan. But if this exemption is allowed to expire on March 31st, the banks will not be able to do as much of that. And that is going to be net negative for the bond market. And so even though Powell did not get the message before today, I think after today, perhaps, he will have received the message. Because in the past, whenever the Powell has said something that is perceived, even though Powell is, one of the most dovish Fed chairman in history, perhaps the most dovish Fed chairman in history, when he has said things that are perceived to be even marginally hawkish he will inevitably backtrack later on after markets throw a temper tantrum like they did today. The threshold, the maximum threshold that Powell has allowed is like almost a 20% decline in equities. He won't let them get down that far. He'll allow perhaps a correction, which we're seeing now, at least in the NASDAQ. And so that might be an indication that Powell will let things fall a little more. But ultimately, he will step in and try to put in a floor, however he can. And he'll say whatever he has to. After he gave that speech back in 2018, the balance sheet runoff is on autopilot. Which was totally tone deaf if your goal is to appease Wall Street. Markets puked, and Powell came back and said, yeah, just kidding. And so while today's speech by Powell is not nearly as openly antagonistic to markets as balance sheet runoff is on autopilot, it's the closest analog that we have in recent memory. And so that makes me think that Powell right now is sitting at home reading articles from CNBC and Bloomberg, and probably has the TV on, and he's listening to Cramer shout about how, Jay, you broke my heart. I thought you were going to give me more free money. How could you do this? And so that means that in a couple of days, or a couple of weeks maybe, Powell will offer, certainly before March 31st, will extend, the SLR exemption, and he'll add in whatever other goodies he thinks he can think of. He'll crowdsource that based on what, the whiners, I'm sure that he's got a bunch of his banker buddies who are on the phone crying, begging him, or perhaps not begging him, perhaps ordering him to engage in all sorts of activities that will benefit them and the markets. Now, at that point, whether Powell is able to, again, come in and, put on his Superman cape, become Super Powell, as he has in the past, and ride in, save the day, and put a floor in the market, that will be when we'll know if he's truly lost control. And again, as I outlined yesterday, George Gammon thinks that it's a lose-lose. I'm not convinced of that yet. As much as I'd like to believe that, I think that the Fed has exceeded my expectations in how long they've been able to sustain this farce. And so I'm not going to stick my neck out there and say that I think, this is the end, until I've seen evidence that they're truly dead. As far as I'm concerned, the Fed put lives on until I've seen evidence otherwise. If the Fed goes down Wall Street's wish list and hands out every last goodie possible, and rates continue to rise, then I'll be willing to throw in the towel on Jerome Powell's behalf. But until then, you must treat the Fed like the cornered and wounded animal that they are. They're still extremely dangerous, and they do have a heartbeat. So, sort of a continuation from yesterday's video. I think that perhaps we might be moving into a period in which I need to address financial markets on a more frequent basis. I don't think it'll be every day, but I think I'll need to watch things pretty closely because things are clearly continuing to heat up. The last time there were actions in the markets, I followed it very closely until it became clear that the Fed put had established a floor in the market, and that the bubble would continue to expand for an indefinite period of time until some new crisis arose that called the optimistic fervor into question. We've clearly reached that point, so I'm glad to finally see. I won't get into any real detail, but it's not that I want people to lose money. It's that we are in an incredibly dangerous and uncharted waters. The more things continue to expand so clearly above, detached from reality, the worse it will ultimately be. All of this so-called growth that we've experienced over the last few years cannot be maintained it will crash at some point, and it will crash spectacularly. And the longer this goes on, the more the bubble expands, the harder we are going to crash at the end, the worse the depression will be. Had we taken our medicine back in 2008, things would be better by now. Had we taken our medicine at any point in that interim period since then, even back in 2018, things would have been better than they're going to be ultimately. Every day that goes by, the bubble gets greater, and the ultimate crash becomes greater as well. And the sooner we rip that Band-Aid off, the sooner we can begin marching towards our recovery. So with that said, I think I'll leave things off here for today.